ASX and AIM-listed sovereign metals are focused on developing a Tier 1 long-life titanium dioxide and graphite operation in Malawi, Southeast Africa. In September 2023, Sovereign published a pre-feasibility study which confirmed Kasiya's potential to be one of the world's largest and lowest cost producers of both titanium dioxide or rutile and flake graphite. Titanium dioxide has many industrial uses, aerospace, paint, and graphite is the largest single component of electric car batteries. Mining giant Rio Tinto is the world's largest producer of titanium slag, and Rio partnered with Sovereign last year, paying 40 million Aussie dollars for a 15% stake in the company. Sapan Ghai, Chief Commercial Officer at Sovereign Metals, joins us now. Welcome, Sapan.
So, thanks for the summary, Donald. It means I can run through these slides a little quicker and get to the Q&A, which is the more fun part. I always find. Hopefully, everyone can see our front page here. This is our February investor presentation. I wonder how many viewers, listeners come across companies who can boast that they are targeting to become the world's largest of anything, the world's lowest cost of anything, and doing so at the lowest emissions possible. And that's exactly what Sovereign Metals intends to do within two critical minerals, those being rutile, which is the highest grade naturally found titanium oxide, and graphite, which ends up in your lithium-ion batteries. The usual disclaimers apply. We are ASX and AIM listed, so we conform to the regulatory requirements of the ASX. First things first, what do we have? We are 100% owner of the Kasiya Rutile Graphite project in Malawi. It's a genuine greenfields discovery. We discovered it in 2019. We were looking for graphite in the country. We found a nice small graphite project, which we took to PFS. While we were looking at that project, we ended up tripping over Kasiya, the world's largest rutile deposit ever found, the world's second largest graphite resource. It's the first rutile dominant deposit found in over 70 years, which is probably why you haven't had many companies come and talk to you about rutile. It's a blanket star mineralization from surface. What does that mean? Think of your usual sponge cake that you can buy from your local Tesco's, and think of Kasiya as the icing on the cake. That's essentially what it is. This is not hard rock. And in the bottom left-hand side of this slide, you can see a picture of one of my colleagues who has just essentially crushed the ore in their hands. It's not hard rock. It doesn't need crushing, grinding, and all the blasting, drilling, and all the usual bits of mining kit that a normal mine would require. Importantly, the rutile and graphite sit as liberated minerals within that structure itself, so they're not chemically bonded in any way. We don't need to reverse geology. We simply get rid of the 98% of stuff we don't need and intend to sell the 2% of stuff that we're focused on. In September 2023, we announced the conclusions of a pre-feasibility study. That pre-feasibility study really put us into a Tier 1 category. The sheer scale of Kasiya can be seen in these numbers, with a post-tax NPV of $1.6 billion US, an average annual EBITDA of over $400 million US per year for 25 years. And importantly, at the end of those 25 years, we'd have only mined 30% of the known resource. So this thing is, generational. It could go on for 50, 60, 70 years quite easily. I think I'm telepathically hearing a lot of people saying, what on earth is rutile? Now, rutile is essentially the highest grade form of titanium dioxide. Titanium is a critical mineral. for the US, for the EU, for Japan, simply because it's used in a plethora of industries due to its high strength, its low weight, it's corrosion resistant, it's temperature resistant, it's biocompatible, which means it can be used in all sorts of products such as cosmetics and food and toiletries. Now, about 90% of titanium enters the market as titanium dioxide, TiO2. And that essentially is a white pigment that ends up in paints, in cosmetics, in plastics, paper. 7% of titanium will end up as the metal. So that becomes your new Apple iPhone, all the way through to the landing gears of your Boeings, your Rolls-Royce engines that help us fly around the world, and obviously a bunch of medical uses such as artificial joints. And specifically for rutile, as part of the rutile market or rutile production ends up as electrode fluxes within the welding space. So very important for construction, for manufacturing and infrastructure. As long as we are wanting to put two sheets of metal together, we'll be needing rutile. As I said, rutile is the highest purity titanium mineral. Now, titanium itself is not a scarce metal. Indeed, if you decided to poke 3 or 4 holes in your backyard, if you're lucky enough to have one, you'd probably end up with some titanium in there. It's the 9th most abundant element in the Earth's crust. However, commercially mineable and commercially viable and usable titanium is a different story. And that usually comes in 2 forms: ilmenite, which is a more commonly found oxide of titanium, and rutile, which is what we have discovered with Sovereign. TiO2, which is the titanium dioxide component, and therefore really, I would say, the commercially viable component of these 2 minerals varies significantly. Ilmenite has a TiO2 grade of anywhere between 30 to 60%. Rutile is near enough pure TiO2 at around 95% grade or above. And that's really reflected in the prices of the 2 minerals, with ilmenite usually trading anywhere between $250 to $400 a ton. Rutile currently getting prices for well over $2,000 a ton. So very different markets. Why is that? Well, if I wanted to, once I had mined ilmenite and I wanted to use that in high-grade feedstock, so good quality paints, good quality titanium metal, I would have to upgrade that using very costly, very capex intensive, very carbon intensive, energy intensive processes, smelting or roasting the ilmenite to a form that is usable by the end users in the titanium space. Now, those 2 forms are usually titanium slag or synthetic rutile, neither of which still get to the 95% that pure natural rutile finds itself at. So rutile is so great, why don't we use just rutile? Simply put, there just isn't enough rutile on the planet. Rutile supply has been suffering from depleting reserves and lowering grades for quite some time. Over the last 10 years, about 250,000 tons of rutile have already come out of the market. We expect that another 250,000 tons, or 50-odd% of the rutile market, to vanish in the coming years, and that's on the back of the demand for titanium feedstock increasing at 3% per annum. So really a critical mineral which is absolutely short of supply. Rutile plays quite a critical role in decarbonization. Now, this is quite important. So rutile is direct feedstock. We dig it up, we liberate it from everything else, and we can sell that to the titanium industry, who can use it immediately, whether they want to produce the metal, the pigments, etc. Ilmenite, as I said, has to go through this process to become a synthetic version of rutile. That process, we have determined, produces anywhere between 2 to 3.3 tons of CO2 emissions. Compare that to digging up the rutile and selling that at 0.1 tons of CO2 emissions. That's almost a 97% reduction in CO2 emissions. Is that a nice to have? Yes. Is it critical to have? Very much so. Why? Well, when you look at your scope 3 emissions, or what ends up as a consumer product, here we've looked at a tin of paint. And if you're using synthetic rutile to produce your pigment that goes into your tin of paint at your local DIY store, you're looking at 7.7 tons of CO2 emissions before it gets there. Using natural rutile from Kasiya, you're looking at nearly half of that, at 4 tons of CO2 for every ton of pigment used. Why is that important? Well, look, the world is really moving that way. A regulation is driving industry to lower supply chain carbon footprints. On this slide, we've just got a collection of some blue chip names who have all committed to reducing the CO2 or the carbon emissions footprint of their supply chain. What's easier than substituting out your high CO2 emissions titanium dioxide for very low CO2 emissions rutile from our project? Rutile is only half the story. We are also the second largest graphite resource in the world. We would be the largest graphite producer once up and running. Graphite makes up about half of a lithium-ion battery. That space is really dominated by China, who are making noises in terms of calling graphite exports national security, and restricting those exports of graphite to places like the US and Japan and South Korea. We all know about lithium-ion batteries, how they're going to end up in electric vehicles, which will help us decarbonize humanity's carbon footprint. But on the left-hand side, you see here, graphite is actually about a third of the carbon footprint of an electric vehicle battery. What better way to reduce that significantly than to take out the Chinese synthetic graphite for Kasiya's graphite, which would be a 99% reduction in CO2 emissions to produce that graphite component of those batteries. Here's a chart that mining analysts love to look at. It's a production cost curve. Essentially, for the non-mining analyst, the lower your column or lower your bar in this chart, the lower your costs, your OPEX, and the wider your bar, the larger your production. We sit right at the bottom end. We are the lowest. We would be the lowest cost producer in the graphite space, and we are the widest bar there as well. So we would be the largest producer within the graphite space. What does that mean? It means when graphite prices are good, our margins are better than anyone else. It means when graphite prices are bad, everyone else has to go bust before it ever affects us. Now, how do we get the rutile and graphite out of the ore at Kasiya? It's a very simple flow sheet. There's no new tech, high tech in this. There's no uses of acids and pyro. This is all very simple gravity separation using the physical properties of the rutile, which is a dense mineral, and the graphite, which is a much lighter mineral. Here in the top left in our facility within Malawi, we are using shaking tables to demonstrate just that. A shaking table is effectively a bench scale version of a gravity separation spiral. On here, we feed the ore, which has mixed with water, down the shaking table. You can see the dark rutile coming off here, and this stream here is the graphite. It's really that simple. Now, Malawi, many of you may know Malawi as a landlocked country in southeastern Africa. How do we get 500,000 tons of product out of Malawi and onto a boat so we can sell it to the big wide world? Well, we have this USP called the Nacala Logistics Corridor. What is that? That's essentially a railway that connects Kasiya. In fact, the railway corridor goes over the southern tip of Kasiya, of the actual mineralized area, and goes all the way out to the Nacala port in Mozambique. Based on our PFS, we had numbers that it would cost us about $100 a ton of product to get from our mine onto a boat, onto a vessel at Nacala, ready to be shipped anywhere in the world. Now, when you're selling a product that's almost $2,000 a ton today, you can swallow those type of logistics costs. Very quickly on Rio Tinto. So Rio Tinto made an initial investment into Sovereign Metals at Topco. So they hold 15% of the listed stock. They invested $40 million for the privilege. That $40 million will be used to advance our DFS, which we intend to kick off mid-year this year. Between now and then, they have an option to acquire another 4.99% by the end of July 2024 at a 10% premium to where they came in at previously, or 28p. We're currently trading at 23.5p. Why are they capped at 19.99% in total? Well, above that, they would have to make a mandatory bid for the entire company. Rio Tinto, what do they bring? A lot of IP, a lot of expertise and experience within the titanium industry, a lot of value chains and supply chains into the battery minerals sector. Importantly for us, they form part of our technical committee. They will help us qualify our graphite for lithium-ion batteries. And if we go into looking at any development finance, they will help us negotiate arrangements for that as well. Now, Rio have what is known as an option to become operator of the project 180 days post Sovereign announcing a DFS. Along with that, they get the marketing rights to 40% of the product. If they elect not to take up that option, they become a plain and simple shareholder like anyone else on the register. Touched on this already. Why is Rio interested in Sovereign? World's largest titanium slag producer, already has existing operations, including within Africa, and has set up a battery minerals division, which they will use to secure supply chains for battery and low carbon materials for their customers, the likes of which are BMW, Ford, and Volvo. A little bit on Malawi. It is a member of the Commonwealth. English is the legal language, so it makes life a lot easier for us Londoners to navigate the legal system there. It's attracting a fair amount of foreign direct investment now, especially with Rio Tinto's investment. It was applauded as a milestone by the mines department there. Mining is part of Malawi's economic development strategy. Along with agriculture and tourism, it creates those three pillars, the three key focus industries that will help Malawi become a self-sustainable country, which is the aim here. You can't operate as a mining company in or as a global mining company, never mind a tier one project mining company anywhere in the world without really having a good framework, looking after local communities and having local support. We're no different. We have a lot of community and stakeholder engagement. We have done so for many years. We are promoting education within Malawi through a number of scholarship programs and school upgrade programs. And look, we have a very diverse workforce with over 80 individuals within Sovereign being Malawian nationals. And of those, at least 30% of those are women. These numbers on the left-hand side in terms of our share price, etc., are from the 31st of January. Funnily enough, that 23.5p is where we finished up today as well. So they're very relevant numbers. We're trading at 132 million pound market cap versus our 1.6 billion MPV. So that gives you a bit of a feel of the disconnect between intrinsic value of our project and where we're trading in terms of our share price. Very quickly on the team, highly experienced. We've all either built, funded, financed projects across Africa, across commodities, across jurisdictions, worked for the majors, worked alongside the majors, worked within financial institutions that have worked on tier one projects in the past. So this is very much bread and butter for this team. And I think with that, I think we should move on to Q&A.
Okay, thank you very much indeed, Sapan. So let me step in and ask you, is it unusual to find two world-class discoveries in such close proximity?
Everything about this is project is unusual, I would say. You know, it was the first rutile discovery in 70 years. Rutile is usually found as a byproduct of within ilmenite projects, apart from one other project, which was the Sierra Rutile project in Sierra Leone. And more often than not, you never find them alongside graphite. So yeah, this is not, and this is an important point, this is not a rutile project and a graphite project. This is both rutile and graphite within the same ore body.
I didn't realise it was so easy to actually separate the two. Could you talk us through that a little bit more? And commercially, how advantageous is the fact that it's so easy?
Sure. Look, go on our social media feeds and you'll find lots of videos of those shaking tables, as well as other parts of our lab, where we show just how easy it is to liberate these products. I mean, really, it's as simple as it's not hard rock. So the titanium portion and the graphite portion are not combined with other minerals and intercorrelated with other minerals, where we need to break them down and redefine the geology of this deposit. It's simply as easy as washing out the parts that we don't need, which leaves us with the parts that we would like.
Talk us through, you mentioned briefly the discovery. You sort of stumbled across it, you said, which is a story in itself, I think. So you were looking for a smaller scale graphite discovery and somehow came across rutile and graphite. So tell us a wee bit more about that. You have been operating in Malawi for a good 10 years now, so you're very well embedded there, and you've got very strong government links. So talk us around all those things.
Sure. So you're right. Sovereign Metals, since 2012, had been looking for graphite in Malawi. That ended up in us finding a deposit called the Malungundi Graphite Project, which we took from discovery all the way through a scoping resource, scoping study, reserve, and a PFS, a Pre-Feasibility Study, which came out in 2018. We were moving that project to a Definitive Feasibility Study, and as part of that, we were doing a lot of bulk test work on the graphite. So we have a lot of innate knowledge on graphite, and specifically the flake graphite that's found in Malawi. While we were producing graphite at lab level from Malungundi, we kept finding titanium within the waste material. So then we asked the question, well, why is there titanium there? Because normally you find these titanium deposits in and around coastlines when they're coming up with such high concentrations. So what we did was look back at 125 historic drill holes, and we found titanium signatures in each and every single one of them. So then the question was, obviously, is this rutile or is it ilmenite? What form of titanium does this take? Because if it's ilmenite, maybe it's a nice byproduct. If it's rutile, this is something that's really going to be a company changer. Turns out it's rutile. So the next question is it commercially viable rutile? Because a lot of the time these titanium oxide projects fall by the wayside because the chemistry set within which those oxides belong make it commercially non-viable. You can't produce the end product because there's too much alumina, too much uranium, thorium, too much chromium in there, too much iron. We had none of those problems. This was totally commercially viable. So then we spent the best part of a few years trying to figure out just how much of it do we have. And turns out we have more than anyone else has ever found on the face of the planet.
Okay, and you've linked up with Rio Tinto, which is quite a thing in itself. To what extent, you mentioned a couple of ways that Rio Tinto are able to assist sovereign. Let's talk about the Definitive Feasibility Study. You said mid-2024 that's coming up. In what ways will Rio Tinto be useful to you?
Yeah, so what we're doing right now is the PFS numbers that I had shown, that $1.6 billion, the $415 million of EBITDA, 25 years mine life, or initial mine life, I should say, that's all based on sovereign standalone. There was no input from Rio Tinto into those numbers. What we're doing now is pulling apart each and all those assumptions that we made to produce that study and looking at those through the lens of a Rio Tinto with all the expertise and experience they have from everything from mining titanium oxide minerals through to tailings management, through to water management, and seeing what their IP, what their tech expertise can bring to the table. That will inform us of what a DFS should really concentrate on. And how we should scope out to DFS, and from there it's go.
Now they sit in your technical committee. I mean, is it an easy working relationship? How have you found it? At the end of the day, you're the minnows, and they're the mining major. How is it working out?
Yep, very much so. Look, it's working out very well. They have a number of employees who are full-time Kasiya individuals, and these are not juniors. These are important individuals in their own right, with lots of experience and expertise of building mines in and around Africa. The way the technical committee works is you have 3 sovereign individuals, you have 3 Rio individuals, but sovereign essentially is chair and has the casting vote. So what does that mean? That means the DFS, when it comes out, will be a sovereign DFS. It will be driven by us as a company. And if you spoke to Rio Tinto, I'm sure they would make the point that, look, at this stage, even though they are helping us in all these ways, they are very much a minority shareholder in the company, and an equity investor almost, and that's the way they see it. Okay.
Which takes us neatly to Martin Pickard, who asks a question, maybe not a straightforward question, but he says, how do you prevent a full takeover by Rio Tinto at a price that they determine, rather than obtaining the maximum value for current shareholders? I hope that's not too much of a curved ball, Sapan.
Well, look, whether it would be Rio Tinto or any other third party making any type of bids for a company, ultimately, the decision lies with the shareholders. So if the shareholders don't like a price, there's no deal to be done. This isn't, as a team, this isn't our first rodeo into M&A as well, and we will do the best to maximize value for our shareholders. Myself, I've worked on, I forget the number of deals, but in terms of value, probably something close to $13 billion of M&A in the last 15 years. So been there, done that quite a bit. So we know how to ensure that our shareholders get the best value. But look, ultimately, what can we do as a team? It's worry less about where the share price is going and what the market is doing, and just advance the project forwards. And those are the exact steps that we are taking. And I think hopefully the market is seeing that in the numerous announcements we're now making into the market, and continue to make, and will continue to make over the course of the coming weeks and months. That
sounds very wise, Sapan. You mentioned a capex figure of 600 million to develop the Kasiya mine earlier. Could you map out a pathway to production for investors for us, please?
Yeah, look, so when it comes to that CapEx number, it seems big when you compare it to your average mining project. This is not your average mining project. This is a tier one project. This belongs in discussions around billions of dollars, not millions of dollars. That $600 million is still only a third of the MPV. It's like 1.5 years worth of EBITDA once this thing is up and running. So, you know, a rutile project of this kind with a graphite byproduct, I see it as eminently financeable by any finance institution. What does that time period between now and production look like? We'll spend the best part of the next kind of 3 to 6 months doing that stripping of the PFS and putting it all together in an optimization, and moving on to the DFS mid-year this year. That'll take us about a year to complete and get us to an FID or a final investment decision. During that time, we'll obviously talk to everyone from the financing banks, the project finance banks, the IFIs, off-takers, because, you know, these are critical minerals and people do want to secure supply of both rutile and graphite out there. And you have seen off-take deals being done. So we see, if you talk about production, we see production conservatively 2028.
Okay, thank you so much for that last answer, Sapan. So that was Sapan Ghai from Sovereign Metals. Thank you very much indeed for joining us there. That is an absolutely fascinating project you've got there. So one for the watch list, I would say.